what is that?
Yeah. That's a term that gets a lot of different products sort of bucketed together. But if I were to, at a high level, talk about accounts receivable financing, it's really a loan or a line of credit where the amount is based on how much your customers owe you, right?
Okay.
And that's a little bit different than factoring or invoice financing, like how I like to call it. And that's really like an outsourced collections company where they'll pay you for your invoices up front and go collect your payment from your customers for a fee. And that's a fun one because of the reputation it gets. But what it comes down to is it's how much are you charging for that service? And the reputation on the bad reputation it gets sometimes is usually because of the high fees and the companies that pay such high fees. But it gets interesting when there are companies that charge as low as 1.5%. That becomes something that may be worth it. If you don't have to wait the next 2 months for your payment, it happens tomorrow, but it's 1.5%.
All right. So let me get this clear, because we've done shows on factoring and stuff before, and
Right.
this sounds a little different than what I've experienced. So accounts receivable finance, let's say I have, and we'll just use easy numbers, I have $1,000 in receivable that I don't think I'm going to be paid within 60 days.
Right.
Feel free to interject if I'm going totally wrong here. So I've got $1,000. I've decided that I need to get that money very quickly. I'm going to give the invoices to you, and you're going to give me $1,000 minus whatever your fee is. Have I got that correct?
Each company will be different in how much they give you up front. So if you have $1,000 invoice, I might give you $1,000 up front, or I might give you $950 up front. It ranges in that sort of range. And depending on the type of customer and of course the size of the invoice, there'll be a fee associated with that. And then usually what they do is they collect the payment and then charge you the fee on the back end, or they might, pay you $950 rather $9,500 up front, and they give you the remainder minus the fee on the back end as well. Okay,
so now once I've got that money, I move on and I start doing my business. You are in charge of collecting that. Is that when you, because the reason is you said line of credit. When I think a line of credit means it's always there. It can go up and down depending on how much you use it. But this sounds like accounts receivable finance. Sounds like, okay, I've got the $1,000 for those invoices. Do I start again? What happens if I need money now? Is that kind of like a one-time transaction? Am I reading that correctly? Or?
Yeah, no. The factoring or the invoice financing is that one-time transaction, but you can do it again, and it just works for you really well in the future if you've already done it once with at the financing company. But what you're talking about, the line of credit, that's a completely different product. Where you have it right in that it's like a credit line that you can pull down from when you need it. But that'll be different than the factoring type of product.
Okay, so the accounts receivable financing, so factoring is different, right? Explain, is factoring different than the account receivable financing?
Yeah,
just trying to clarify it.
No, for sure. Yeah.
Tell us what the factoring is then. Tell us what factoring is.
So the factoring is the factoring company. They're really buying your invoice from you, right? Where they come in and say, let's say your invoice is $1,000. They're going to buy that invoice and then go collect against that invoice. Okay. Whereas the accounts receivable financing, they're really giving you the loan or that credit just based on how much you're owed, but they don't necessarily take that invoice from you, and then they just give you a credit amount, against the total amount that you're owed.
Okay, so that's the piece I was missing then. So okay, so then I've got $1,000 in invoices. You loan me the money, but I still can collect on those those invoices, right?
On the AR financing line of credit is actually it'll be you who's paying the lender back as opposed to them collecting. But on factoring, they're the ones who are going to go and collect it for you.
Okay. So because the factoring, that name gets thrown around, and I've always heard it as a program. So basically, I would sign up for the whole year, and you would take all my invoices and keep paying me, and you go collect them whenever they're due.